How about them apples? Holy mackerel. Steak dinner it is for me. I'll have to figure out the most expensive place in Detroit for that. Oracle, you don't need a good earnings report when you mention AI with Google and Microsoft. 8:30 CPR. You talk about CPI. You talk about a low bar. Point one, folks. That's a low bar. Let's get to a few earnings plays. Let's get things going and let's be nice in the chat today, folks. Pre-market prep starts right now.
Welcome to Benzinga's Pre-Market Prep.
This is a volatile puppy here.
It's all about execution styles and strategies.
When I was referring to volatile puppy, I wasn't talking about our chat here, folks. S&P futures, strong close, up 7.5 handles, knocking on the door at 5,300. Last day, well, we're rolling over from the June to the SEP, but we'll be following June through the remainder of the week. The buck backing off a little bit, down 9 cents, 105.11. TLT holding steady here, up 15 cents, 91.98. Crude clears out the pair of highs at the 78 and a quarter level, up 94 cents at 78.84. Gold up 270. Kind of a quiet couple days. That's a 23.28.80. Silver stuck in the 29 handle, up 21 cents at 29.44. And Bitcoin futures finding support just under that area, up $420 at 68,155. Let's bring in Triple D. And Triple D, you do not look one day over 48.
I feel one day over 48. Every time I try to wake up in the morning, when you're younger, like I look at my kids, it just wake up, like boom, and then they're going. I'm like groggy and trying to get up. And maybe I got to start drinking coffee in the morning. Maybe that's what you do. Like, I don't drink coffee. You drink coffee?
I do.
Yeah, maybe I got to start doing that.
Costco.
AB, do you drink coffee? Bring AB in here. You drink coffee in the morning?
I do. Well, basically, I get like I do a 6-ounce thing on the Keurig, and I put some water in it from the fridge so that it's cool enough that I can start drinking it right away. And I usually drink about like half of it. So I'd say I drink about 3 ounces of coffee every morning.
Get a little shot of caffeine in your blood.
Maybe
that's my problem.
I like
I'm
the
tired in the morning because I don't drink any caffeine.
I like the cheap coffee. I like the donut shop, like the Dunkin' Donuts, donut shop coffee. I'm not like a coffee snob. Some people are out there with their French press and they've got their nice beans and everything. I'm just like, whatever, just give me whatever. So Juan Carlos is saying do some push-ups when you wake up, and then I'll get your
Costco coffee, Dennis. Go out to Costco, get the Columbia coffee, put in 4 scoops for 3 cups, and I'm telling you, you'll be ready to go in the morning.
I'll be flying.
You'll be going. That's it. Maybe I get a little warm up in the afternoon if I need it, but not usually. So, Dennis, it was a steak dinner. It was not a lunch bet. That was a steak dinner.
I don't know what it was. I know you owe me a lot of steak dinners from steak dinners past.
Well, we're starting fresh. We're starting fresh.
The 25 steak dinners he's lost over the last 10 years. He's like -5 steak dinners now, folks, for real. But you know what? He did win this bet here. This was a long one. Some of our bets lasted like a day. This one lasted like a year. It was like a year. I almost won. You almost won. I almost won. Then you won. So here we are. Apple does indeed go over $200 here a share. Wow. Came out of nowhere. They had the conference. It got hit on the conference. And then just yesterday morning, they came out with their buying shoes on, and they could not stop buying it all day. Vicious rally off the open. Gapped up just a little bit. Caught every OPG trader probably on the wrong side.
Oh, yeah.
Gapping up. And then, boom. It went 195, 96, 97, 98, 99, almost 200, and then breaks out through 200. I have no idea why it blasted off like that. Some people were saying it was some analyst commentary. Some people were saying, it's just, people reading into Apple intelligence, a little bit deeper. I'm not going to even try to guess the reason, but I tell you, man, that's a breakout and a half.
Well, D.A. Davidson came out after the. Oh, I mean, who are they?
You're telling me D.A. Davidson drove this thing
I'm
7%.
telling you what the news was, Dennis. I'm not telling you, but here's the thinking. Okay, this is just gonna just reinvigorate the upgrade cycle. In order to have this kind of AI, the upgrade cycle is coming up. Revenues up in 25, 26, 27, 28, 29, and 30. Everyone's going to need a new phone to, and I think it's pretty smart. Apple Intelligence. I think, sometimes simple
It's
is good.
intelligent.
Yeah. Yep. Apple Intelligent. So it's the upgrade cycle, which this is going to spur revenue growth. Oh, Paul Delivers says it was the Affirm news. They brought Affirm into it. That's what I just think. Everyone's worried about revenue growth, and here you go. Right? Boom. Now you don't have to worry about revenue growth anymore. That was a breakout, and that was a breakout by a big margin. So not standing in the way of this one. The biggest move in this thing, I think, since 2022. But there you go, over $200. Traded down $1 in the pre-market session, but what a move! It just lifted the market up by the bootstraps.
Oh, it did. I mean, we wanted a catalyst and Apple to the rescue here. It was just an impressive move. Like, I was like jaw dropper because, the market cap, and I'm pretty sure it probably reclaimed #2 spot. I don't know if anybody said that in the media, but I don't think Nvidia has risen 7% since it reclaimed that spot. So I'm assuming Apple's back to #2. And
Not
Nvidia's
only that, I think
back
Apple's very
to
close to
#3
passing Microsoft now.
in one day.
Yeah.
Like a 7% move, you're talking like a $300 billion move. Like, that's just incredible wealth creation there. And because it's one thing, a stock with a small market cap goes from 192 to 207. This is the second biggest company in the world, going up 7% on basically, not much news at all. Think about everybody who had the 200 calls maybe going in, and going into that event. And then it goes down $4, and you're like, and then did AB have the 200 calls?
No. I did. Well, I was kicking myself because that seems like a move I would have done, is bought some calls after the sell-off on during the event. But I was perusing on Reddit last night, and Wall Street Bets was just full of people who made a killing on these calls, posting screenshots of they bought $5,000 worth of calls and made $100,000, whatever. But there is the flip side and kind of the dark side of options here. And I found this post yesterday, and it was tough. I'll pull this up real quick.
Someone lost 93 grand in Nvidia, right?
I spend a second on it. So this guy said, "I don't know what to do. My head hurts." His portfolio is down 80,000 the past 3 months. This was posted 2 days ago on Monday. He said lost on Nvidia calls, and then on Apple calls, $200 for 621. Had 200 contracts and got decimated. Savings gone. And again, this was on Monday during the Apple event when it went down. Then
yesterday, I think any of this crap's real.
Yeah. Oh yeah. A lot
Some of it.
Yeah, a lot of it's real on Wall Street Bets, and then
a lot of it's fake on Wall Street Bets too.
I don't know. No, I mean, here's the thing: is because Wall Street Bets did ban any posts about GameStop, whatever. They tried to move away from this meme stocks thing, and a lot of it's silly, a lot of it's stupid. But about one in every 50 posts on there or something, someone actually has a good trade idea and stuff. And most people are like this, posting their screenshots of their thing. But anyway, so this guy had 200 Apple contracts. Then yesterday, I go to the thread, and a bunch of people in the comments are like, you got saved today. Apple's up 7%. And this guy who posted the original post comes in the comments and is like, "No, I sold my contracts on Monday when they were down." So he would have, and he did the math on it, and he would have
never take a loss.
He would have made, he probably
never sold a loss is what you're supposed to do, right?
Yeah, he probably sold all his option contracts for, a 90% loss on Monday for a little bit of money. And then the next day it would have brought his whole portfolio back. So it was just a tough move by this guy, because again, if he just would have held on to those Apple calls he had on Monday, he probably would have made all his money back.
So many trading lessons from this on what not to do. You're down 82% your portfolio because you own 2, positions, and it's all full of options. I mean, that's all a timing trade. Options expire worthless, folks. A lot of them do. So you want to put 100% of your money on 2 options, and then they don't pan out, you lose 100% of your portfolio. So no pity here. Sorry, buddy. I'm just going to give you the hard lessons here. $82,000. You can recover. We hope you recover. Maybe you will. But you can't be going, if you're, putting all of your money, all of your hard-earned money, all of your savings into one or two options contracts, you're not listening to the show and you're doing everything wrong. Because, yeah, you can get rich that way, but you can get poor a lot easier. Some of those options are going to pan out, but the majority of options expire worthless. So you're going to always hear the good stories on Wall Street Bets and Twitter. Oh, I put all my money in these options and I made $1 million on 10 grand. But you're not going to hear about the other 1,000 people that put the 10 grand in those options and all got nothing. It's like the lottery. You only hear about the lottery ticket winners. You don't hear about the lottery ticket losers. Going back to my finance course once again, buyers of options, if you're buying up calls, it's like lottery tickets. You're buying puts, it's like insurance. That's, back to my finance professor there. But I mean, when you're just loading up on options, that's just buying a bunch of lottery tickets and hoping you win the lottery. So hard lesson here, invest the right way, buy good companies at reasonable valuations. You want to do it in options, that's fine. But take longer term dated options where you're not going to get killed in the short term premiums. And also, I would say don't just load up one contract with one expiration, do it in different ways. But I've always just, I think buyers of options in the long run lose money. Sellers of options in the long run make money. I look at all my professional trader friends, they all sell options. Options sellers. Think about, we get Options AI on here. We get CC Legator. He's not talking about going all in, buy calls on this thing or whatever. He's looking at where these options are likely to expire worthless and looking to sell those contracts. Sell the lottery tickets. Don't buy the lottery tickets.
All right, let's move on. We got Oracle. We got and I think this might be my favorite comment in the chat ever, and it comes from Mitch Olson, and he says, "We're AI, actual intelligence." Wasn't that nice of Mitch Olson?
Yeah, that is. Wait, you say we are?
Yeah. Or me and Dennis, I guess you're included in that too. All right, Dennis, man, you got it all going on upstairs today, man. You got the hair going today.
What's wrong with the hair? You don't like that hairdo?
You got that
hairdo's awesome.
It's his birthday week. You can't,
partying all night. My birthday. Look, it's awesome.
You know what you need? You need a little pony. You need to get a little pony up there. Yeah,
I could do that. This looks good. Okay, here, look.
Oh,
Combed it just for you. I'm all pretty now.
Oracle me.
Oracle.
All right, Oracle.
That's your cue.
Yeah, sorry, I was reading another post.
He's just admiring my beautiful hairdo.
No, he's just a producer. Go ahead.
Oracle reported earnings last night, Joel. As you alluded to, the earnings themselves weren't great. The company missed on the numbers. Let me pull those up real quick. But the company did mention AI, which of course is enough to get a little boost. So the numbers came in. We had EPS came in at $1.63, which missed the $1.65 estimate. Sales came in at $14.3 billion, missed the $14.5 billion estimate. But then came in on an open AI contract partnership with Google and more, and they declared a 40-cent dividend. So Oracle trading up 7.5% this morning, again, after missing those earnings on the actual estimates. But then, the color there between the AI, mentioning the partnerships, the dividend, enough good news to make up for those misses.
So the partnership, interesting enough, came out first. So if you look at the chart, Joel, the OpenAI partnership came out before the earnings print, and it popped up to like $132 on the partnerships. And then the earnings print came and they missed and they tanked it down to 118. Just like that, the algos. And you know what? That was just a huge buying opportunity because you knew the partnership was going to drive the price. So it was a gift to sell off on the earnings. And then they bought it right back. They're like, nah, just did an OpenAI part. Buy this stock here right now. We don't care that it missed by 2 cents. We're buying the stock right now. So this is all partnership that drove this. Wasn't the earnings report. The earnings report actually knocked it down for about a split second. And it popped right back. So it was the only thing reporting. So I was all over the action watching this, obviously, last night. Because it was the only major one to really care about. So, yeah. So that was the course of events. The partnership popped it. The earnings dropped it. And then just the thoughts, and then they start talking more about the partnership on CNBC, and obviously the stock continued to go higher. Still long Oracle in my long-term account.
All right, this is kind of tough on the technicals, right? Because we're just gapping up in a wild area, but I'm just going to give a potential range today. And I would say if I was long this thing and it lost 132, and this is just based on a 30-minute chart. That's been holding 132 since late last night. So I'll give that half star support. And then for resistance, like right now, if my goal was to sell Oracle today, I'd say, boy, I would love to see 137.37. That's the pre-market high. I just would lower my expectations after the open. So there you go. There's potential. Probably we'll see, I don't know, more chance of seeing the 132, obviously, because we're down to that area. But there you go. Minor half star support, 132 Oracle. Congratulations to Oracle shareholders. You probably weren't feeling too good when it went to 118.15, but there you go. And I don't know what the straddle move was in this one either, but probably pretty close to $10, Dennis. I don't know.
I doubt it was that high.
Yeah,
I think it was and again, it was the OpenAI news. I didn't look at the straddle either. I'm too lazy to go look it up. So, Chad, if you've got it, let us know. It's new all-time highs, though. So remember, I don't like certain stocks making new all-time highs. I like being long stocks making new all-time highs. I stay long Oracle.
All right. Well, I guess let's go to Peltz. So Peltz lost his proxy battle at Disney. He lost, but still won. He lost his battle at Disney, but still made over $1 billion on the investment as the stock turned around.
I'd like to make $1 billion on my losers.
Exactly. I'd like to be able to lose and still make $1 billion.
Yeah.
But now he is getting into a new stock. Joel beat me to it, pulled it up. That is ticker RTO. Renticle Initial PLC. This is a company that is based in Britain. I don't really know what they do. It's a pest. It was founded in 1925 as a pest control business. I don't assume that's what they fully do now because it's a
Terminex. They bought. This is the old Terminex.
Oh, so it is still a pest control play.
Yeah.
Okay.
This is your classic Peltz. They come in. Icon used to be the same way. They come in, the biggest losers of the year, and they get a big position in there, and then they want to come on activists, and they try to drive the price back up. And, when it gets disclosed, they typically do pop significantly here. So it's an Elliott play too, really. I like Elliott the best. But this is their playbook. Stocks really beat up. They buy some piece of junk, not necessarily a piece of junk, but a company that's performing poorly at the time, and the stock's been going down. And they load up, and then they know once it gets disclosed, the stock's going to pop 5 to 10%. And then, they usually stay in for quite a while. And they try to, obviously drive the price higher through, talking and, maybe with the board and trying to turn things around. And if it doesn't work out, they get the hell out and they usually make money still. If it does work out, in the case of the one that didn't work out was Disney, and obviously didn't, get the whatever he wanted there, but still worked out. So it's got to be nice to be load up and then disclose your position, and then the stocks pop.
We need him to take an activist stake in PreMarket Prep.
We need him to take an activist stake on some China stocks here. Some China's need some active stake. We need some Babas and some Baidus, because these things are just disasters.
I'll just, these, you could get a couple different reactions in these things. And right now you're getting a nice pop in this stock, not a heavily traded stock. 30.47 is your pre-market high. I'm looking, there's been some congestion over $30. You have a high way up at 30.62. So you're popping right into that area. You haven't been there since April. So if it just blows through there, then it blows through there. Then if it comes back down, use it as potential support. But just don't get Southwest Airlines on this one. That's all I have to say. Pop over 30.
Wow. And that did not hold. So LUV, give us the details from yesterday again here, AB, but did not hold the gains whatsoever.
Yeah, so Southwest got a pop after Elliott announced $2 billion? Yeah, $2 billion stake, called for a CEO change. Stock popped up, I want to say it was around 5% on Monday on this news, and just basically gave up all those gains. Oh, it actually closed up 7% on Monday, closed down 5.5% yesterday. So I mean, this shows you that like when these investors come in, make the call, like you said, we're seeing it on RTO. You get the pop, but if it's a stock that the market doesn't love, no pun intended, which clearly Southwest Airlines has not been in favor whatsoever. They're willing to kind of take those profits and run, because I think a lot of these activist positions and what they're trying to do take a long time, right? You can't just come in, buy $2 billion worth of shares and say, bye-bye, CEO. You got to go through this process, have shareholder votes, through the board, try to get board seats, this whole thing. So they're like, all right, let's just see how this plays out. And I think to Southwest's credit, I think because the Southwest operates fully on Boeings, right? 757 Maxes or 747 Maxes, whatever they are. They don't have any Airbus planes. Southwest, to its credit, I think has had a lot of headwinds. Again, also no pun intended there.
He's all over the head.
They're
all intended, folks.
I'm not trying to. No, I'm not.
They're all
is that Missouri journalism degree coming up? Yeah, go ahead, AB.
I was just going to say that I think a lot of Southwest's headwinds, besides the whole Christmas thing a couple years ago where they canceled like all their flights, haven't really been fully in their control. So like, it does Southwest turn around right when Boeing finally gets its stuff together, maybe. But like, I don't know how much of this is the actual CEO. I think his name's Bob Jordan. I don't know how much of it is his fault that like these Boeing planes have been malfunctioning and whatnot, and they've been losing, getting less deliveries and all this. So, I don't know. I like Southwest. I mean, I still fly Southwest a decent amount. So, I don't know. I'd be willing to buy Southwest down here at some point. Not today is not the day, but maybe closer to $25.
Well, this is the area. Like if you missed it and you think that you got a major bottom here under $25, this is the pullback. You filled the gap, right? And then there you go. You got the 50% retracement in this area, 27.30, 27.50. Let's see. I just don't think now when you come back and you breach these areas, I think there's a couple reasons for support. First of all, people that covered their short and added to their short on that are going to be buying. And what if he's out there buying more? I mean, you don't know that this is just his final stake. And then you know what sometimes these jokers do is like, oh well, I'm going to be an active. I like him. I'm gonna piggyback this trade, and they come in with it. So if you feel like you want to own this company and we're regretting it on Monday, Tuesday, it's back down here. I mean, I have no problem. I wouldn't let it, go to $19 on me or anything, but a little pullback. Buy the dip.
Let's do an exercise here. Look at the bottom right chart. I want you to go through big 5 or 6 airlines there. LUV, you can clearly see in the last 7 years, huge bull market overall. Down. Let's go through them all. Let's do Delta. Delta is one of the better ones, actually, DAL. Even Delta, though, in the last 7 years, not up. You're basically flat. That's about as good as you get with the airlines in the last 7 years. Go to AAL, disaster. And I have a small piece of it, which is getting smaller every day and might be gone. Just an epic disaster. Until 9 years ago, it was $50. It's $11. Go to Save. Oh, Save. They tried to save it with the merger. $70 a share. It's $3. Go to JetBlue, JBLU, which was one that's trying to save. They need to maybe save themselves because it was $22 and it's $5 here now too. UAL, we missed. Give them some love. Go to UAL. Bring up that one on the right. Same story, different stock. $70, $60. You're down. So here you've had this awesome bull market for the last 7 or 8 years. In every single one of these airline stocks in the last 7 years, you were down money. These things are not good investments and not good long-term investments. They obviously are very dependent on fuel costs, which have went up over the last, probably 5 to 6 years. And they're just there's so many things that they just don't control. So, and then, it's difficult. Obviously if occupancy goes down, they lose money. I mean, just a difficult business in the long run. So if you're buying airlines in the long run, it just has not worked out last 7, 8 years.
What did someone call them? Like a hedge fund hotel or something that, they load up and then they dump it and then I don't know who gave me that term, but, and let's just go. I mean, since we're on this exercise, Carnival Cruise Lines.
Same story.
Yeah.
Carnival, CCL. NCLH, I think NCLH
RCL
is gonna,
though, RCL is a different one now.
RCL's been best of breed. Royal Caribbean's has got it going on. So even at that though, NCLH is disaster too. But RCL has one, so if you want to buy best of breed in the cruise ships, it's been RCL. But even at that, $100 to $150 over the last 7 or 8 years. They're not great. They're not just like on fire killing it. It's okay. So I mean, they're just tough investments. Been tough investments.
All right, we're 3 minutes away from this CPI report.
Sure.
I'll give you guys the preview here. And Joel, you were saying it's a low bar. I think it's a high bar.
Well, yeah, you could phrase it both ways.
Okay, so we're looking for a 0.1% increase in CPI for May, which would be down from the 0.3% that we got in April. So the expectation is that we're dropping 0.2%. That's for the monthly CPI. The CPI year over year is expected to hold steady at 3.4%. The core CPI is expected to hold steady as well at 0.3%. Core CPI year over year is expected to drop from 3.6% to 3.5%. So that's why I'm saying it's a high bar, is because
I got you.
We are no, I just was I think it was fun to have, it's like we're in the we're getting ready for the Olympics, right? The Olympics coming up this summer. You got the high jumpers, they're going to have low bars and high bars. We're going for we're going for that for the inflation today. We'll see if we are able to see that drop in CPI. My assumption, what I think we'll be talking about with Blue, which I think we talked about last time, is again the rent calculation and how that is, because I assume that will be one of the big things in this monthly CPI report is will rent prices normalize or start coming down at all, or will shelter costs still be one of the main drivers of inflation? Because we know it's not coming from new and used vehicles. Energy prices probably will be higher for the month of April because we had gas prices going up throughout that month. Now they're starting to come down a little bit though, but that won't be reflected in this month's CPI. That will not be reflected until next month. So I wouldn't be looking at the cheaper gas prices and thinking, oh, inflation's coming down, because that wasn't really what was happening last month.
We don't know. We don't know with that. One thing, be careful. It's why I'm not going to jump the gun on this. Let me get to the S&Ps. Man, did they come out with some funky revisions? Right? Revisions, and then so you get the number and then something's revised. So let's set the apple cart here. We're at 53.90 right there. That's a new all-time high. If we close here, it'd be a new all-time closing high. No resistance. If I said there was resistance, I'd be lying to you. There's absolutely nothing on the charts. So there you go. If you're shorting into this, you're just shorting just a blind number. On the downside, your close 53.84. That it's been traded through. I would say if you're trying to protect some profits in the S&Ps, watch out for that pre-market low of 53.80. Not much in there, so there is your setup here. And here we go. The algo jumpers. They jump high, they jump low. We're stuck there. Hot.
Well, I was just guessing from the chart. Let's see. Oh no, hold on.
What's going on?
Core CPI month over month came in at 0.2% versus 0.3%. Year over year CPI for May came in at 3.3% versus 3.4% estimated. So the year over year came in light. Year over year for May, 3.4 versus 3.5% estimated, 3.6% prior. So that did drop 0.2%. Still waiting for the actual monthly number here for May, but looking like it's light. S&P 500.
Oh, yeah. There was a pause there. It had to move up, to move down. Then it was kind of stuck, and I'm like, oh, I hope my internet didn't go. But when I said there's no resistance in there, I said there's no resistance. There's absolutely no resistance here. We just went to 54.26 in a quarter, moving up at a really alarming pace here. Looking at my potential resistance at 54.53.75. That's
May.
Go ahead. Revision down, right?
This says the US CPI May month over month for May was 0.0% versus 0.1% estimated. So low bar, high bar, no matter what we're talking about here, the numbers cleared that bar. And the market is loving it, trading up. I mean, would we open at new all-time highs here, Joel?
Oh, by far. We were trading at new all-time high anyways. And, your lie detector test here, let's go to the TLT. Let's make this reflect the price action here. TLT explodes. Inflation is under control. The economy is humming. They have the luxury here of now bringing down rates into
And rate cuts are back on the board.
Yeah, rate cuts are back on the table right now, but who needs rate cuts when the market's ripping like this? But everything, Apple hasn't gone green yet, but one heck of a day after that yesterday. So we're trying to look at Apple, but that's still flat. But there we go. Give us some more details on that. Market wanted good numbers and market delivered.
Yeah, I mean, I'll have to wait and go through and see exactly which areas inflation dropped in. Like I said, because I don't think it was in that OER, the owner equivalence rent. I was seeing some people talking about that ahead of this report. But again, I mean, it makes sense to me. I think that you would see Apple lagging today because I think Apple, had the numbers been hot, people would be going into Apple as kind of a flight to safety. But now that the numbers weren't hot and people are thinking about rate cuts again, people might be going to some of these more small caps and, moving money away from the mega cap tech stocks into some of these smaller, small cap stocks. IWM, let's check that out, is up 2.5%. Holy cow. So again, the small caps getting a lot of love here today. I mean, if you go to your upstarts of the world, up 5%. Let's name some other small cap stocks like Asana. Let's check that out. Oh, it's not doing anything. I'm just trying to think of
Asana. We haven't mentioned Asana, but Asana's getting a pop. I just wanted JD in the chat here. Explain to me the relation between the CPI and the TLT. You're new to the show here. The TLT is just an indicator, right, of the 30-year bond, right? And so if interest rates are going to potentially go down, bond rates, it's good for the bonds, good for the TLT. So that's what we're looking at. That's your lie detector test. I like to look at the actual 30-year bond. There's the same thing. That's ripping. That's up over a point and a half. So if you're looking for a turnaround here, keep an eye. I mean, right now the lie detector test with the TLT is saying we're holding on to these gains. Apple has now gone green, 45.32 pre-market high. Like I said, folks, I tried to give you resistance. I try and be honest when there's no resistance. Solar stocks, they want lower rates. ENPH trading up $4. First Solar is probably up $20. No, that's only up $8.50. But the IWM, there you go, getting a big boost. That's up $5. Can that ever clear this 210 area? I'll tell you right now, when this thing ever could clear that 210 area for good, you see all the tops here on the daily and the monthlies. That would be a big area. So now we're 10 points off the high. Maybe have a little bit of profit taking in here, but do we have blue in there? Do we have blue in the? Yeah, let's go to blue.
All right, let's go ahead and bring Blue on, get his thoughts on the CPI report. Again, I'm going to pull up the full report from BLS so we can go through and start looking at which areas were hot and not. But without further ado, Blue.
Blue.
Hey, thank you.
Former director at the CME. Blue, will you just admit that you really look forward to my email at the beginning of the month asking you to come on Benzinga's pre-market prep during the inflation data? Is there anything you look forward to more?
Nothing more. I love to talk about inflation because, people obsess about 1 month's number and they're like idiots. We've had a pattern here, inflation has come down. But anyway, it's a good number. And I do look forward to talking to you.
All right. So give us the good of the good, and then let's find some bad.
All right. So inflation is down because all the things that caused it to go up have gone away. Okay. The supply chain issues are gone. The fiscal policy stimulus is gone. Interest rates have gone from 0 to 5 plus. There's no QE. There's just QT. So, Will Rogers once said that if you want to get out of a hole, stop digging. Well, we stopped digging about a year and a half ago, and we're out of the hole. Now, what about the data? So, people are obsessing about this data because they want to see if the Fed's really going to lower interest rates this year. If you look at Fed funds futures, one day it says we're going to get 2 cuts. The next day we're only going to get 1 cut. But Jerome Powell, the Fed chair, he said several times, he really wants the evidence to show to cut rates. They want to cut rates. And the first cut is so much more important than any other cut. That just starts the process because they never want to make the first cut if they think they might have to reverse, so they need enough evidence. And today's number is just added to it that we're not at 2%. Okay. We haven't gone down to 2% on the metric they care about. But we're clearly at 3%. And that's way below 9, which was our peak. And it's way below the Fed funds rate at 5.33 or whatever it is, between 5.25 and 5.5. So they've got, and the yield curve's still inverted. These are not good things to keep going. So the Fed's got a lot of reasons to cut. I don't know if they'll do it in July or September. I can tell you they won't do it in November. That's just because that's 2 days. That's right after the election. And who wants to be a political football? Not the Fed. July is back in play with this number. September is in play. And I personally, my view is they'll go in one of these meetings. The evidence is there.
What about, there's got to be something bad here. There's got to be something concerning in this report, something that maybe doesn't add up. Anything, I know it just came out, so analyzing the data here, anything where you said, well, that could be something that might bite us in the butt next month.
Well, what could bite equities in the butt is that the U.S. economy really isn't all that interest rate sensitive anymore. And so, a quarter point, 2 cuts. Let's just say they're 2 cuts. So that's 50 basis points. That's not going to do a lot for equity. So, people are day trading this thing, and I understand that. And that some of them got it right and some got it wrong. But longer term, a small increase in the Fed funds rate it's good for equities. Don't get me wrong. It's just not that good. Because the economy is chugging along at 2%. A small cut in rates isn't going to change that. So that's the thing, is that we probably got a quick, we got the reaction to the number, but the reality is that we're more or less in the same place. The Fed's going to cut, but not much. Higher for longer is still in place. It's just not quite as high as for longer.
I know, like when you're looking at it, you mentioned that the Fed doesn't want to start cutting unless it knows it can continue that cycle. I mean, or not the market, the Fed. And the Fed going back to when it did do a kind of stop-go policy where it would raise rates 1 month, cut rates the next month based on inflation. What is the danger of that, of kind of having that wishy-washy policy and the stop-go? I think that was in the 80s in the Volcker days.
Well, it was really the late 90s with Greenspan. He had a problem between 97 and 2000, and there were a lot of things going on that were unexpected. He had the Asian contagion, he had LTCM, he had 9/11, but he raised and he cut and he raised and he cut, and then he ended up really cutting. The issue for the Fed is their credibility. They just feel like that when they make their first cut, it's such a big decision for them. They don't want to reverse it. So what that really means is that they often take too long, or they take longer than maybe they should because they want to be absolutely sure. But if you understand that the U.S. economy isn't all that interest rate sensitive anymore, it is, but not a big thing. By the way, when I say interest rate sensitive, I don't mean equities. if you got a lot of earnings, they get discounted by the interest rate. So, you're interest rate sensitive. But if you're a restaurant or something like that, or you're, in the service economy, you're not that interest rate sensitive. Nothing like, back in the 50s, what do they say? Is General Motors goes, the U.S. economy goes. That's certainly not true anymore. So we're in a different world. But the Fed just doesn't want to reverse course. That's what they really want to avoid. And I think they have the comfort level now to know that inflation's not going back up. It may not go down to 2%, but it's not going back up.
So this just kind of makes the case of stable for longer, right? I mean, there's just so much hubbub about we're going, well, up's pretty much been off the table since inflation has been coming down, but lower. But what's wrong? What about the people? What's wrong with fixed income people getting 4.5? I mean, it's not the market, right? It's not getting some of these wild gains in the market. But I mean, doesn't this it help a lot? I mean, money I'm sitting on at 5.5%, 6%. Yeah, well, I wish I had it all in an Nvidia, but overall, I mean, it helps different segments. So I mean, could there be a point where we bring blue on in a year and they have a cut, or do you think that like going 6 months? Let's say the whole year. Let's say we don't get a cut. Things keep humming along like they are. Well, obviously we got to get through November, and that's going to be I don't know what that's going to be.
Yeah, right.
But January. We have blue on. This is our January show, and we're right here where we are. I mean, that's a possibility too, right?
It is a possibility, but you got to understand that Fed funds above the prevailing inflation rate is not a comfortable place. Most people would call that restrictive. We don't know how restrictive it is, but it's not where you want to be. An inverted yield curve. You don't want to be there. The longer term should always be more risky than the shorter term. Why are you getting a higher risk premium for tomorrow than you are for 10 years? Okay, that makes absolutely no sense. So from the Federal Reserve's point of view, you really want to get back to some kind of sensibility on long-term rates versus short-term rates. And that really means a flat to a slightly positive yield curve. And then once you're there, you just want to stay there. That's your point, Joel. The economy likes stability way more than it likes all this speculation about what the Fed's going to do. Stability is what drives investment. And, the Fed is playing around with instability here by keeping us guessing. They should just tell us, hey, we'd like to be at 4.5%. If the inflation rate's 3%, we're going to go there, and let's just stay there until we see what happens.
Last time you were on, you gave, was it the Russell rule? You gave us this rule that I can't remember the exact name of it, that said that, based on that rule, we should already be cutting. What was the name of the rule?
It's not the Russell rule. That's the Russell 2000.
Taylor rule.
And they would like it if we cut, but it's the Taylor rule. And it's Professor Taylor. He did a brilliant piece of research in the early 90s in which he said, look, hey, the Fed has two goals: encourage full employment, encourage price stability. I'm just going to see how they're doing, and I'm going to weight them 50-50. Turned out the data that he chose was pretty supportive of that view. And if you follow that view, it's time for the Fed. It's been time by the Taylor rule to get the rates down a little bit. Not a lot, just a little.
As far as equities go, would this be a scenario? I know you're not giving us overall predictions on the market, but could it be that when we finally do get that rate cut, it may be a time to hit the exit button, because that means that the Fed sees weakness in the economy and is needing to do stuff? No. Okay, go ahead.
No, we're talking about the inflation rate. And right now, if the inflation rate is 3%, they've got room to cut. What you're talking about is if there's some kind of recession fear comes up. Now, when the Fed raises rates, they take the stairs up. When there's a recession, they take the elevator down. Okay. All right. we don't see any evidence of recession. We do see some evidence that the labor market is coming back into balance after its, post-COVID surge. But we're looking like about a 2% GDP, real GDP economy. And if labor productivity, it's doing pretty well. So if labor productivity is going up 1.5%, we're in good shape. So, but for the Fed to cut more, it does have to have a recession signal, and it doesn't have one. There's no recession signal out there. There are signals that the labor market is coming back into balance. Job openings are back down to 2019 levels. Voluntary job quits are back down to 2019 levels. So we're back to where we used to be, but we're not in recession. We were okay before the pandemic. You got to remember that. We weren't like in trouble or anything.
Blue, if I went out on a limb and said we were actually below the Fed's 2% inflation target rate right now, would you call me crazy?
No, I wouldn't. And that's because I've been avoiding this commentary today because every time on your show I spend too much time on it. But you're hinting at the owner equivalent rent problem. If you take the CPI, which is a little bit above 3%, and you take out owner equivalent rent, which is 25% of the CPI, and it's measured totally badly and improperly and confusingly and lagged, you're back very close to 2%. So you can make a case that we're close to 2% already. But on the core PCE inflation metric, that's the one the Fed targets, we're more like 2.678, when we get it at the end of the month. So we're below 3, but we're not 2. And then that's another debate. The Fed's not going to change their metric because their credibility, they can't change horses in midstream just because of pressure. So there's a lot of economists like me that think that, the CPI measures inflation incorrectly. By the way, that doesn't mean we shouldn't measure shelter. It just means we don't measure it right.
Yeah, this is coming from Dean Baker, who's a senior economist at the Center for Economic Policy. Inflation, excluding owner's equivalent rent, which no one pays, to your point, because we're not measuring shelter correctly, has been 1.9% over the last year. So,
and by the way, it was about 2.2 or 2.3 last month. So it's it's bouncing around that 2% for like 6 or 7 months. It's been telling us we're okay.
And so my assumption is like, okay, if you include the OER, then we're at like 3.4% or whatever they say it's at. But if you included rent in a correct manner, it would probably still be higher than 2%, but not quite to that 3.4%. So if we wanted to say maybe closer to like 2.5% or something, because rent prices are still high. But they're not as high as when you ask people, hey, what would you rent your home out for right now? And people are saying, just outlandish numbers. And it's not, I just don't get it, because it seems like if they wanted to collect data on what people are actually paying for rent, they could do that somewhat easily. Instead, they go with this OER.
Oh, no. They do that. But only 7% of the CPI uses actual rents. And even actual rents are very delayed because you don't get a new rent every month.
Right.
You sign a lease and then a year later it goes down or something. So they're lagged as well. But 25% of the CPI, give or take, is owner equivalent rent. That's the one that's screwed up. And 7% or 8% or so is actual rent measurements, but that's still lagged.
Right.
But let me give the data guys some credit. They try to do a good job. They've been doing it this way since the late 80s. We've only been complaining about it in the last 2 years because it's only now that it's actually shown up to make a difference. It's like when something changes and all of a sudden you realize, oh, maybe I've been doing that wrong for a while, but you can't go back. So I understand that, but it's the Fed. Forget about owner equivalent rent. The metric they've chosen is under 3%. That's the core PCE CPI. Core inflation rate. There's plenty of room to make 2 cuts. So what's holding them back? What's holding them back is fears that fiscal policy, the big budget deficits, might cause inflation. It won't. Budget deficits don't cause inflation. Federal consumption, how much money the federal government spends, that can cause inflation. They spent $5 trillion during the pandemic. And by the way, half of that was Biden and half of that was Trump. So this is apolitical. All right. They spent a ton of money and it caused a surge in inflation, but they're not doing that anymore. So, there's plenty of room to cut rates a couple of times and then see how it goes. You just don't want to cut in November because that's the election, but you can do September and December. You can do July and December. You got everything's open to you.
So what are we going to hear out of Mr. Powell today? 3 o'clock, Fed decision, PPI tomorrow. It's just, the data's going our way. Things are looking good. No curveballs. What would you say? Like if Jerome Powell got sick, you got a call from the Federal Reserve and say, Blue, could you sit in for Jerome Powell today? What would you say?
All right. Well, I'm going to put it a little differently. So, I'm a batter. The count is 3-2. I'm pretty good. I'm thinking he's throwing a curveball. He's not going to pitch it right down the middle to me. Okay. He doesn't do that. And what do I mean by a curveball? The Fed's data dependent. So, he'll probably say that a dozen times. But the data dependency is now leaning toward a cut. So I think he's going to open the cut door. I don't know if he'll open July, but I'm pretty sure he'll open September. And he probably will just say, let's just wait for another month. But, I got to tell you, if you're waiting for 1 month, you're not paying attention. 1 month's data never should change your view. It can change it a little, but not much.
All right, Blue Putnam.
Last one, and then we'll let you go, Blue. Is there a chance that even if we keep getting solid inflation data, but the market keeps going up, that Powell and the Fed will be looking at the market and say, "Wow, equity prices are just way too high. We can't cut right now."
The Fed has looked at equity prices a couple of times, and they're not good news. Greenspan talked about exuberance, Anyway, that didn't work out well. And Jay Powell was raising rates in 2018, and the equities tanked, and then he tanked. The Fed is not responsible for equity markets. They should know that by now. They're responsible for the economy, for labor markets, for inflation, and how they can influence them. So if they're paying attention to equities, more power to them, but I don't think they should be.
Got it. Well, Blue, thank you for joining us today on Pre-Market Prep. Again, Blue Putnam, we bring him on pretty much every month on these days where we get CPI, and it's always great to catch up with you.
Thank you.
Talk to you
soon,
All
right, guys. Blue. Always great to catch up with Blue. Let's get that chart back up, Joel. What are we doing? Are we still
We're
rallying?
just pressing. We are just pressing here. We're pressing up at the highs of the session. 54.32. I mean, that so far we've had like a 52-point range. That's really about our average daily range. So if you're looking for an outside, exceeding that, 54.32 would take you outside the average daily range. Triple D, how you doing out there?
Wow, I can't believe that IWM. I mean, the SPY just doesn't tell the story here whatsoever. Like, it just got back half of its month's losses in 20 minutes. That's incredible. It's up 3%. I mean, we are light by a tick, and it goes up 3%. I guess there's just bottled up demand for everything here.
Well,
this is the green light go, maybe?
Going into it, we said that the expectations had been set, right? That inflation was going to fall. And so, it was already kind of like, okay, we need to hit this number. And then not only did it hit it, but it went lower than the expectation, which was already expecting for this drop in inflation. So I'm not really surprised to see that reaction, just because I think this is like probably the best in terms of lower inflation, the best report that we've gotten in the last 6 months or so. since we started getting those reports from the highs that are like, okay, inflation now is starting to fall from there. But then we had been very stagnant at, 3.5%, still seeing monthly CPI numbers, positive 0.3%. So seeing this one come down to 0, I think is very significant. And again, not surprising to see money flowing out from, like, we looked at Apple was still in the red. It's probably, I'm assuming, got back at least in the green a little bit now.
Oh yeah, the old sell Apple, buy Nvidia trick is back on here.
Or sell Apple, buy
I
SmartCaps.
I think so. We've been hiding the mega cap tech trade. Nvidia's not the stock I'm buying today. Apple's not the stock I'm buying on
Nope.
this. It's all that's beating up interest rate sensitive plays. So, I mean, somebody's bought Nvidia up, and it was up even more a few minutes ago to like 123.5. I think they're wrong. I don't think that's the stock you want to buy today. Like, again, I'm long in a long-term account, not talking about it, but day trader hat on here. You went to the stocks, like it's like solar stocks. Those are ripping. Like, I don't think they're gonna just come in here and buy everything today. It's S&P is only going to be up 0.86%, Joel, and the IWM is going to be up 3%.
Yeah.
They're going to knock some crap down. So to make up for the difference, they're not all going to be up 3%. And I'm not seeing, so I would think, like, I don't think Apple's going to tack on another 10 bucks here today. I wouldn't surprise me if a stock like Nvidia turned around and went to the red. Those aren't stocks they're buying today. But again, maybe we reverse. But IWM up 3%, it's a jaw dropper move. I mean, I don't remember it going up 3% for a very long time. That's a huge move. Like, so we topped out 1 month ago. Back on May, I'm just eyeballing the chart. It looks like about May the 15th.
You got it right. Yep.
About 209. And we've been going down basically for a month straight. Like 17 days. IWM just drifted down. We're going to go all back in 1 day? In 1 day? Wow, it feels like a little bit of an overreaction to the upside. So, not saying I'm coming and just fading. Maybe, you got to look at other sectors. This is good for obviously these small cap stocks. I would have just thought not up $6 on the IWM. I would never have thought it had that much gas in it. That's a huge move. Like, I'm trying to look at the stocks and I'm struggling to find anything up 3%. Again, small caps. I don't have a lot of small caps on my screen, but I mean, just even looking through all like stocks that I've got, there's no stock in the S&P. There's besides Oracle, which reported earnings, there's hardly nothing up 3%. So I mean, there's
almost Broadcom almost, but that
2.
has we have earnings after.
Not a lot. You're struggling to find anything that could even be close to that. So again, your solar stocks are going to go up, but even like TAN is only up 3.2. I would think TAN should be up more than the IWM. I think the IWM's overshooting here a little bit.
The other thing I was thinking, just going back to the inflation number, and one of the things is we don't know when the actual when it's calculated, where crude was at, and everything, and we know that's a big component. And crude's kind of back in the same place. We did have that dip, but if they took those calculations for crude when it was like 78, 79 bucks, you had that big dip, but it's it's right back there now. So. But that's a big component. I saw you back there, and I usually see you like boom, 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 and I just saw you sit back there, and I'm like, and I'm a little worried.
There wasn't really an opportunity, Joel. I mean, you had to be really quick. Like, it was jaw dropper where it was like instantaneous. IWM was up over 2%. Like this, the algos were really fast on this one. Sometimes you get some opportunities, but they were really fast. I was trying to cover some shorts, trying to get a little bit more long on it, because you could tell, like, I bring up the lie detector test DLT and I'm like, it's real. It's going to be a huge move. I just feel like it's overshot now, but I was like, I'm not coming in here going to buy IWM now up $6 here today. I'm going to wait for a pullback here. Maybe this paves the road for interest rate cuts later this year. A number like this very well could. Maybe we think about it in September again, and they need that. But I don't want to chase this move here. These have been stocks that have underperformed for so long. Bagholder Central everywhere here. Bagholder Central everywhere. So if I'm going to go and buy the bags, I'm long IWM in the long-term account, so I'm making some money off of this. But I think if I'm a day trader here, I think I'm waiting for a check back, a little bit of a check back. not just chasing it up 3% here today.
What about Kathy?
Oh, she'll be flying because she needs lower rates. So I didn't look at 2.88% ARKK. I got to think, most of her stocks are going to be up significantly here today. Like, like the Affirm, which is already trading higher, Upstarts. What are some other big Kathy names?
I like Upstart. UiPath, ticker Path is
all that stuff's going to be barking today. The dogs be barking today because they all need lower rates.
Upstart already up 7%. That's going to be my my one to watch today. If that dips at all in the first 30 minutes, I might take a stab at some Upstart.
You got to get a dip, though. You don't want to buy it. You never want to buy a stock up 6.66%. Write that down. Never buy a stock up 6.66%. That's what Upstart's up right now.
Okay. But you know what?
Taste the beast.
Sometimes, and Dennis, I don't know if you've been playing the opens as much lately, but sometimes, and it depends the stocks they're in. Sometimes you could just be like a big order, a big stagnant order in a stock. And I'm, not, let's say Upstart, maybe there's a big order at like 24.5 or something. And, they don't cancel the order. They get a, improved price on it. So sometimes that can happen. I know you haven't been as active about trading the opens as much, but sometimes maybe
there's just not a lot of orders on the books anymore.
Yeah,
back in the day, you'd get an order holder down, but could it open at 25 if there's a big order there? Yeah, I don't think it's gonna though. I mean, that's the one thing. Like trying the openings, I am very active on the openings on the third Fridays. A day like this, try to buying some of these stocks that you are probably gonna move with the IWM very well, like an Upstart being up 6% here today. Trying to buy that at 25 on a check back, like AB is saying, maybe. I'm not paying up 6.66. It's only up 6.09 here now, folks. But on a check back, you get up 3% today, get up what the IWM's up. Yeah, that's interesting. That's more interesting. Those are day trading plays, though.
All right, guys, it is 9:03 a.m. Thank you for tuning in with us this morning. Some things we missed. I was supposed to preview Broadcom's earnings tonight. AVGO will report after the close today. We also, what other headline did we miss? There was one other thing I don't think we got a chance to talk about. Either way, we had a good morning.
Oh, we didn't talk GameStop.
We didn't talk GameStop.
The GameStop has went to the red.
Oh, no!
This stock has so much incredible chop. Just bring up the chart from last night here, Joel. It was down $1, then it was up $2, then it was back down. I mean, I tweeted last night, this might just be the ultimate fade stock. It has a huge move and you're selling it. It has a huge down move and you're buying it. It was all over the place last night. Like, look at the action, even from yesterday. It runs up, but then after hours, it ran up to like $32. Or it was down $1. You don't see it on the chart, but these are huge moves. Then up $3, then it ran down $3, then it ran back up $3. Now it's trying to run back down $3. These are 10% moves overnight. I mean, these moves, if you're chasing the move in GameStop, you are absolutely doing it wrong. Not saying it's going down, not saying it's going up. I'm just saying the moves, it's got the accordion going here. And even, when it's a 45-point move, then it's back down to 23. Now we're back up to 50. Now we're back down to 23. Now we're coming back up to 30 here again. These are incredible money being made and lost. Chasing in this stock, disastrous. Fading in the stock, it's been really good.
And Roaring Kitty's still holding on to those $20 calls. He has got 120,000 option contracts. So if you want to watch the open interest of those contracts that strike, it's the $20 calls on the June monthlies. You should be able to see if he starts offloading some of those, or at least there will be some signs there. But all right, Joel, who do we got coming on with us tomorrow?
Jay Woods, CMT,
nice.
Chief Global Strategist at Freedom Capital Markets. He's going to be joining us here to give us a fundamental outlook on the markets and a little bit of technicals. But you know what? Also, we got PPI tomorrow. I mean, I know the CPI is a CPI, and that's what everyone cares about. But PPI coming out tomorrow. Broadcom after the close. Not much tomorrow
and it's
morning.
Running straight up into the print Broadcom. It's up. The strategy of buying stocks ahead of the report, it's working here.
Yeah, did you do it here, Dennis?
I've been in and out of Broadcom on the long side. Yeah. So typically when I'm doing these, I'm buying the close, selling the open, buying the close, selling the open on the stocks that are going to report, buying the close, because the moves are so much overnight, AB. I mean, imagine you're doing a day trading. Well, it's already run up 41 points here this morning.
I didn't realize,
So, you're already up 41 points if you bought the close.
I didn't realize.
So you're taking the profits and then you're moving back in, and then maybe you're done for the day. But I've always traded them that way, buying the close on the ones that report and selling the open because they get, ramped up overnight. Everybody's excited. People are talking about it coming into the day. Oh, it's going to report here tomorrow night. And then, it's that buzz. But I mean, just look at the move here. Like you've had a huge move 5-6 days. So expectations very high for Broadcom here. Stock is at a new all-time high. They disappointed last quarter, remember? So just be careful chasing it here at this point in time. A lot of money's been made here just being long ahead of the report.
Yeah, I was looking at the numbers last night. I didn't realize Broadcom is nearly $1 trillion company already. It's crazy. And I guess
stock split.
Oh, there you go, Joel.
Yeah,
there you go. That could happen.
Oh my
All right,
gosh,
guys.
it's 9:07. We got to get out of here.
9:07. We got live trading.
trading.
We got live trading live right now. We will be back 8 a.m. tomorrow morning. Jay Woods, make sure to be there. We'll break down that PPI number as well as Broadcom's earnings and other top headlines. We will see you guys there.